Taoiseach, I too would like to raise the issue of the Oxfam report which came out on Monday, and Deputy O'Sullivan quite rightly refers to the need for tax justice. Another way to look at this might be enlightened self-interest, that if we do our bit for global taxation, it will make for a stronger reputation and stronger investment in Ireland. Now, as you know, Oxfam has ranked Ireland as the 6th worst tax haven in the world. And it would be easy to dismiss Oxfam's report as unfair or misleading or alarmist, but they're not alone. In 2013, Ireland was singled out as a tax haven by the United States Senate Committee on Homeland Security. In 2015, the UN's Special Rapporteur on Extreme Poverty reported that when lists of tax havens are drawn up, Ireland is always prominently among them. And just a few months ago, Brazil has added Ireland to its list of tax havens. Now, Taoiseach, I agree, Ireland is absolutely not a tax haven, but there is a growing international perception that we just might be. Now, this is damaging our international reputation, and Taoiseach, it could do far worse, because our international trade treaties are predicated on us not being a tax haven. Now, Oxfam has levelled 3 charges at Ireland. The first is that our corporation tax rate is too low. And with the greatest of respect to Oxfam, I would suggest that that is none of their business. That is entirely within the competence of this country. The second charge Oxfam levels is that Ireland facilitates large-scale profit sharing. Now, several years ago, that would have been a very reasonable charge, but I agree that considerable progress has been made in recent years. But the third charge, Taoiseach, that Oxfam levels at us is that we offer tax incentives to certain sectors that allows them to avoid paying tax. And here, unfortunately, Oxfam are absolutely on the money. In the past few years, Taoiseach, we've seen the creation of a new suite of investment funds for property investors, domestic property investors, but mainly foreign property investors. These include real estate investment trusts, qualified investment funds, Irish collective asset management vehicles, and now most recently Irish real estate funds. Now, up until a few years ago, property companies paid tax on their profits just like other companies in Ireland. Almost every OECD country applies that principles. Ireland doesn't anymore. Using these new vehicles, Taoiseach, big foreign landlords can pay no tax in Ireland on massive profits. And critically, Taoiseach, they don't have to file publicly accessible accounts. So we don't know what level of taxes are being avoided, we don't know what profits are being offshored, and we don't know what rulings these funds have from the revenue commissioners. Now, worryingly, Taoiseach, the OECD lists 4 criteria for tax havens. And in Ireland, foreign landlords now meet 3 of those 4 criteria. So my 2 questions are this. Thank you, Count Corla. Taoiseach, do you agree that property companies in Ireland should pay taxes on the profits they make in Ireland? And secondly, do you agree that investment funds availing of tax avoidance mechanisms in this country should have to file publicly accessible accounts? Thank you, Taoiseach.
First of all, thank Deputy Donnelly for his comments and for his question. Obviously, let me acknowledge your assistance in respect of the Finance Bill and other matters in relation to Section 110, which you raised, and which some changes were made and brought about here. I recall the comments that were made at the US Senate Committee, indicating that Ireland was alleged to be a tax haven. That was later disproved and obviously commented upon. I'm aware of the action taken by Brazil. Ireland is not the first country where that's applied to, and we reject that as well. In respect of your comments in respect of about the international trade treaties, corporation tax, as you know, is a matter for each individual country, a national competence enshrined in the European treaties, and you are right that this is Ireland's business. Secondly, in respect of the profit sharing issue that you raised, and you referred to also to the third charge, which was about tax incentives to avoid paying tax. Well, clearly there's an appeal lodged by government, by the Attorney General on behalf of the government, in respect of a finding or a ruling made by the European Commission in this regard. I might say to you that in regard to the Irish collective asset management vehicles, or ICAVs as they're called, is one of a range of legal structures which regulated collective investment schemes can take Others include investment limited partnerships, common contractual funds, unit trusts and investment companies. Of these, only the investment company is obliged to publish its accounts in accordance with the Companies Act. ICAVs are still obliged to keep proper books of accounts that must be audited and be made available to persons who have a right to inspect the accounts, including the competent authority for investment funds, that is the Central Bank of Ireland and the Revenue Commissioners. And failure by the directors of an ICAV to ensure that this happens is subject to very serious consequences, including the possibility of prosecution and administrative sanction. And also notice that ICAVs are subject to additional layers of regulation that most other companies are not. These are not only additional domestic rules, but European rules also apply to such structures by the requirements imposed by the UCITS Directive and the AIFM Directive. Now, in the Finance Bill, the Minister for Finance also made changes to the taxation of Irish funds that hold Irish real estate. And Irish real estate funds must deduct a 20% withholding tax on certain property distributions to non-resident investors. And the legislation there addresses the concerns raised regarding the use of fund vehicles to invest in Irish property. The Finance Bill also introduced legislation to address concerns that had been raised by yourself indeed in respect of Section 110 regime by some investors to minimise their Irish tax liabilities on Irish property transactions. And this will close off the unintended use of the Section 110 regime for Irish property transactions. The Irish funds industry is obviously a key part of the internationally traded financial services sector, often referred to as the ISFC. 12,500 people are employed directly and indirectly, both in Dublin and in a number of locations around the country. There are some €2 trillion of assets under management in funds in Dublin, and the sector services a further €2 trillion in assets domiciled elsewhere. And this area of IFSC remains by some margin its biggest sector by employment. So clearly the funds may be structured in different ways, as you have pointed out. So the Minister has moved in the Finance Bill to address two issues there relating to the misuse of those certain vehicles where they were being used for Irish property transactions.
Donnelly.
Thank you for your answer, Taoiseach.
As well.
Let me give you an example. So Project Eagle, Cerberus has just filed its 2015 accounts on Project Eagle. By my reckoning, they made about £168 million in taxable profits, and they paid less than £1,600 in tax at 0.001% tax. Now, I acknowledge the very significant moves by the government in the Finance Bill on Section 110s, but what's interesting about the Project Eagle accounts is that they've moved about half of the assets out of the Section 110. Because Section 110 companies have to file publicly accessible accounts. And the only reason vulture funds got shut down was because TDs in this House and journalists and senators were able to see them and raise this. They couldn't hide the amount of money that was being avoided. But about half, hundreds of millions of pounds of assets have been moved out of the Section 110. We've no idea where they've gone. If they've gone into a qualified investment fund or an ICAV or one of these, we will no longer be able to see what they're doing. And that's the core of my question, Taoiseach. So you stated to Deputy O'Sullivan that we have nothing to hide in Ireland. I agree. So can I ask you this? When it comes to these funds, ICAVs and QIFs in particular, were I or other members of this House to table a bill stating that they had to file publicly accessible accounts, is that something you would look on favourably? Thank you, Ken Corley.
As I said, I acknowledge the fact that you raised on a number of occasions the Section 110, which I think was a subject of some quite intensive discussion and change at during the Finance Bill. The second of the changes that the Minister brought in there related to the Irish fund vehicles. The Finance Bill provides for the introduction of a tax regime here for Irish real estate funds, or IRFs, and that legislation will ensure that the Irish tax base is appropriately protected where Irish funds are used to hold Irish real estate. And the key features, as you know, Deputy Donnelly, are that IRFs are funds where 25% or more of the value of the fund is made up of Irish real estate assets. Any rental income or development profits earned by that IRF will be included in the calculation of the IRF's profits. Capital gains will be included in the calculation of profits unless the asset is held for 5 years or more, except where the investor can influence or control the IRF. And where an IRF makes a distribution, non-resident investors will be subject to a withholding tax of 20%. I'm not saying that everything has been done here. to deal with the issues that you raise. I don't have the details of Cerebus that you mentioned here, but clearly this is a matter that the Minister for Finance has taken an interest in and has moved to change the law to make it more open and accountable and transparent where that be necessary. And I'm sure if further changes have to be made, he'll be willing to do that too.
If leaders